Good morning, everyone. Welcome to the On Time on Target Morning Show and happy St. Patrick's Day. Day 3 coming at you live from Florida, from Treasure Island. So more good family time on vacation. And, it's been a couple easy days in the market. Things have been recovering from the net big NASDAQ sell-off. And, life has been good today. We shall see. That this is day 2 of the Federal Reserve meeting. So what's going to happen there, I don't know, but my call is that the Federal Reserve is going to keep interest rates unchanged. They're still going to commit to the longer, lower interest rate policy, which I think is going to last a couple years. They've said a couple years. I say like a decade, just because rates can't go up. You may notice the 10-year is creeping up. People are making a big deal out of that. We shall see. That's why we talk about it every day. But we're going to talk about boring bonds today. So if you happen to hold bonds, either in a bond fund, like, FIXD is my favorite short term, FTLB is my favorite long term, talk about how those have been affected during this miniature raise in interest rates. We're also going to talk about how, if you happen to hold a bond ladder, so you have a series of individual bonds, how are those affected during this time between now and maturity? So that's what we're going to break down today. We do have some longs and shorts in the room. Let me hit return on there yet one more time, and we'll talk about those once we get through the open. With that, if you're catching us on replay, make sure you hit subscribe and the notification bell so you get notified when these go live every day. Also, if you'd like to join us in the morning on a daily basis, it's $25 a month. There's a chat room and a Q&A room for people to ask me questions, and I will answer them. With that, let's go ahead and get started. All right, welcome back, everyone. Here's today's lineup card for the day. Welcome to St. Patrick's Day. Yeah, you don't see I have any green on up here, but you have to trust it. I probably have a green pair of shorts on. I don't know. You don't know. It doesn't matter because you can't pitch me from a long away. All right, here is make sure you have your Q&A window set up correctly and your chat window set up correctly. Standard disclaimer applies. This is a financial education presentation. So you have to do your own due diligence before acting upon anything you hear this morning. Make sure you read the full disclaimer on occasion at ototnow.com. All right, our mission objectives for today, Wednesday, March 17th, St. Patrick's Day. So grow our money, protect our money, and live off our money. Really, today we're talking about bonds, and that's more of a protect your money / live off your money. So kind of shifting gears from our normal focus on technology, total return, making the most. Now we're talking about capital preservation. So when is this right for you? Well, if you're in retirement, generally you're in capital preservation mode. You might hold some Apple or some Amazon or some Boeing to, continue to get some growth and make sure you outpace inflation. But for the most part, you are looking at trying to take the money you've spent a lifetime acquiring and then, how to live off of that, how to protect it so it doesn't go down, so you don't have financial issues in your out years, if you will. So that's what we're going to talk about today. We will talk about both individual bonds and bond funds, and we're going to talk about the rising rates. Again, not huge yet, but I know there's concerns out there with all the spending we're doing and whether inflation is going to happen or not. So we'll check out all of that. All right, the question of the day is, what is a bond ladder? So we'll break that down on Investopedia, and I'll talk to how that's affected during this time. All right, our flow today is long, short, open, short, long. We're going to take a look at the market review, go around the U.S. headline review. We're looking at long-term investments and short-term trades. Again, this should be up here, so let's change that right now. We'll look at FIXD, which is an FTLB, the two bond funds that I use. We'll get into short-term trades. If you look in the chat, I'll refresh that again. We have one long with Amazon. You might have heard their healthcare initiative. They're basically looking at privatizing their own healthcare inside the company, which is kind of interesting. And I think if that does happen, which it's happening, um, is that will be another reason that Congress will probably step in and eventually break up Amazon, right? Because they're doing everything internal. You know, they want to have their own airline. They've talked about that for years. They do have their own, logistics system short of airlines. But now if they have their own healthcare, it's like, okay, time to break these guys up, which is a good news story. If you hold Amazon, everybody should have a share. If you can afford one, the $3,100. But if you can get a share of Amazon, you can ride it right through the breakup. If you remember Ma Bell back in the days when Ma Bell broke up into 8 different companies, what did that mean? Payday all around. They all did well. Not necessarily all did well, but you had more value with the company broken up versus the company as is, and it's already very valuable. Okay, other things. So that's our long for the day. Really, nothing else set up of note that I liked. For shorts, you have Pinduoduo, which is PDD. The chairman, you'll see the chart here in a second. The chairman stepped down early and unexpectedly, so that's hitting the stock to about 10%. You have Plug Power, which had released earnings and then said, oops, our bad, we're going to have to restate our financials. So anytime you run into accounting issues, the stock's going to get hit. It's also down about 10%. Lucid Motors is down. That's CCIV. Again, that's a SPAC. Down without a headline, but they're definitely selling off hard this morning. And also NEO selling off largely because it popped the other day. So those are kind of some tertiary shorts, if you will. Also, if you're following the Wall Street Bet stuff, then GameStop again is on the way down. It's still above 200, but again going further south today. All right, contingencies and academic resources are standard. All right, let's take a look at Google Chrome and CNBC.com here. Get back over and we'll look at the futures. Refresh these real quick for you. You can see the Dow is in the green and everything else is in the red, but really not a whole, a percent, and the NASDAQ's kind of selling off hard. But you can see the headline there. Yields are rising. We'll get to that here in a second. And we're waiting on an update from the Fed. Make sure the Fed does, quote unquote, the right thing, if you will. All right, let's go ahead and take a look at Europe. In the red across the board. Asia, Hong Kong barely in the green. Everything else pretty well even, though, across the board. There's our numbers from yesterday. The NASDAQ did hang on to a green, being in the green day. But again, they were up a lot more earlier, right? So it seemed like it was selling off through the day, and that's what you'll see on the chart as well. Bonds. There's your 1.666. Ooh, the specter of 666. But the highest rate we've seen in 13 months, so a fresh 13-month high. And of course, the Fed meeting is going to release their statement today. All right, oil hanging out at 64, above the range. Gold and silver selling off a little bit, and then crypto, Bitcoin. Really, for Bitcoin, it's kind of unchanged. Anytime it's less than a percent, I call that unchanged. Before we go into the headlines, let's go ahead and just take a look at Fent Pipes real quick. I got out of order this morning. Backing up to the overall, here's where we are when you really look at lately, even though yesterday was in the red, still really in an uptrend. And of course, the NASDAQ, I think, is within 5% of all-time highs. Today, when you zoom in on what's going on day to day, you can look at yesterday's action. So here's where we opened yesterday. And again, sold off pretty hard, kind of went into the close with a little bit of strength, but you can see basically faded, and here's where we are down going into today, all the way back to where we, opened 2 days ago. So, Monday's open, if you will. So that's where we are going into today. All right, and there's our Luckin Coffee, was in play yesterday. We'll see what happens today. We'll get that set up for our short-term stuff here in a minute. All right, back to the headline review on CNBC.com. All right. Closing a window down here. All right, mortgage refinance demand tanks. Of course it will, right? It's kind of one of those, if you haven't done it yet, you're like right at the very end. Even if the Fed keeps rates, short-term rates at zero, which I anticipate, so does everybody else, the market rates have crept up. So you're kind of past that window of should I have refied? Well, the answer now is a resounding yes. You should have, but if you haven't, well, you're still probably better than the interest rate you got from a decade ago. So it's kind of your last chance, if you will. And then, of course, if rates would move up, another 0.5%, the 10-year gets above 2%, yeah, then you're not going to refi at all, and you probably won't. That window's closed, right? If you're buying new property, you're still going to get a historically low interest rate, but you're not going to get the unbelievably low interest rate that we've had forever. All right. As you know, the Fed's going to say something today at 2 o'clock Eastern. So we'll see what they say. Again, we're not really expecting much of a change of their tone. Could it change things significantly if they start talking about inflation? Yes, that will spook the markets. Volatility will scream higher if that is the case, and you can expect to sell off. I do not think that's going to happen. Speaking of volatility, VXX, if you've tracked that, was in a super low state. I actually bought some below 13 yesterday. It's like, wow. It's back above 13 going into today. I don't know when I'm really looking at selling it. I just kind of want to wait for when I showed you the overall S&P 500, you kind of a straight line up with a little pockets of volatility. Those pockets of volatility, the VXX tends to pop up to around 15 or 16. So anyhow, kind of looking at that as a place to offload it. Of course, if the Fed says something ridiculous today, like, yeah, we're going to raise interest rates to slow down this economy, then VXX will probably be at 20 off of something like that. So we shall say. We shall see, I should say. German COVID cases rising exponentially. COVID's kind of been out in the, out of the news cycle for a while, so it's just kind of nice. Looks like they're having vaccine issues over there. All right, let's go ahead and take a look at what's going on in bond world during this time. So, I like the fund FIXD as a placeholder of money. That's where you can sit back and make 3.5% on your money. And you're like, well, Steve, FIXD has sucked. And I would have to say, I agree. So most of the time we've been buying kind of, if you take it back to the election, here's where we really kind of acquired a whole bunch of FIXD as our, kind of a protect our money sort of thing. And it has sold off. So it went from 54.50 down to, touching 53. I do think, as you can see, 53 is basically a floor. If you have a bunch of it and you have a better opportunity, you can rotate out of FIXD, take your small loss. Remember, it does pay you monthly. So whatever your capital gain loss is offset by the money that's coming in monthly off of this thing. So depending on how long you've held it, but certainly you can acquire it here at 53. I do think the floor is in. Again, it's at, almost a year low, and not a bad place to buy it here. If rates continue to go higher, this could sell off some more, but not significantly. The other one is FTLB. You have to pull up on another chart, and if you have this, it's actually gone up. It's not Franklin Universal Trust. Here, it's this one. It's the Buy Right Hedged Bond Fund, which has performed a lot better. We'll see if we can find a chart here. We'll hit a 6-month chart, wait for that to kind of flow in, see if it gives it to us. There we go, get to the 6-month. So you can see that in a longer, FTLB is a longer duration. So basically it goes out further, and you would think it'd be affected more, but it's also a buy right fund, so there's a lot more options to generate cash. So that has been an outperformer in this environment. So would not have called that. You would think it would be affected more. So again, the short-term effect of FIXD as well as FTLB has been a little what I would call out of whack, but those are the two funds that I like. So FTLB is more of a let's hold that longer term and benefit from that versus FIXD, which is a short just store of value, which is not stored value very well. Yep, I got that. I hear you. Okay. When you talk about individual bonds, so what goes on with an individual bond during a rising interest rate environment? So I'll use an example of a Ford bond. So if you have a Ford bond that pays you, say, 5% and it matures in, say, 9 years from now, 2030. Well, what's going to happen during that bond is, say you paid $10,000 for it. Again, it pays out 5% and maturity is 10 years. Well, while you hold that bond, the day you bought it for par, right? So you bought it for 10,000, and during that time, you can buy and sell that bond across the open market. So when they do these huge bond releases, then all these bonds go out, people buy them at par, and then they trade them. Okay, just like you can think of a stock like at Roblox came out at 64.50, and then it gets in the open market and it trades. Same thing with the bond. But if you're holding that bond to maturity, you basically are getting all the coupon payments every 6 months. And then when you get to the end of that period, at the maturity date, you get your $10,000 back. So the value in between now and then, you literally don't care unless you need to sell that bond. Now, if you have a bond ladder set up, generally that's a long-term mechanism, right? It's an engine to kick off interest and coupon payments for either to live off of or just to protect your capital. So if you have one of these, sliver, if you will, a $10,000 bond, and then you take out and make a bond ladder, which is taking a whole bunch of these individual bonds and going across the looks at the rungs of the ladder, if you will. You have several of them scheduled out for different maturity dates. So always, within every quarter, if you have say 400,000 in bonds, you're going to have $10,000 positions or maybe $25,000 positions that are going to mature every quarter, and you have this set out for years. Okay, so as things mature, you re-enter the bond ladder or you don't. I'm not re-entering bonds ladders right now. So if you've had one mature in the past little while, I've either put you into FIXD or Apple or something else if I wanted to switch and add more risk. But I have not basically gone back into the bond ladder. I will resume that once we get a little bit more of an idea of what's going on with interest rates. So in summary, bond funds tend to get hit during a rising interest rate environment. So a little bit, don't sweat that. It won't be a huge amount, but individual bonds, largely their value changes, but you don't care because you're going to hold them until maturity. All right, let's take a look at our setup for the opening trade. We have about 45 seconds. Bring the chat window back up here. Okay, our long is going to be Amazon, AMZN. I don't love that as a long. The short is going to be PDD, where the chairman stepped down. You can see the big sell-off from earlier this morning from 171 all the way down to 145, and it's kind of stabilized from there. So with that, give me a second and get set up for the open. Good morning, everyone. Welcome to the on-time, on-target play of the day. You have three screens in front of you. You have the S&P 500, Amazon long, and PDD short. There's the opening bell. So we're going to zoom in on the SPY. You know that things are negative here a little bit with the S&P 500. So let's zoom in on that and see how the market reacts to the open. For our long, you see Amazon's actually in the red a little bit, but I do with their new healthcare announcement that they just really started talking about. You can see the move this morning is already up. So we're going to keep an eye on that long. Obviously, the price point's an issue. You can't take a whole bunch of this because of the large price point. And then PDD is Pinduoduo. That is short. And again, chairman stepping down unexpectedly. So you can see that it's selling off 6%. All right. Amazon's really kind of not moving. So let's kill that off of here and pull up another short. Let's pull up Plug Power. Again, Plug Power ran into some financial accounting issues. So down 15% already. So zoom in and see. Here's where it opened at 37, dipped down to 36 already. Kind of too far gone for our strategy for the, out of that 5 to 10% window. PDD is starting to stripe down. High of the day at 153. It's already moved $5 worth, so really can't chase that as well, but we'll certainly keep it on the radar scope and see what happens. Check out CCIV. Again, this is Lucid Motors. No real headline associated with this, and awesome. We have sirens in the background. That is swell this morning. So see how it's acting. Okay, down 5%. I don't know. Don't have enough of a headline to know that it's going to necessarily sell off other than it meets our criteria. If you were desperate, this would be your trade, but you are really throwing a dart here 29.8, take it at 29.4. That's a 40-cent stop. Again, covering the high of the day. So I'll draw it on here. I'm not going to take this myself, and nor do I necessarily am all that excited. But if you are dying to trade, 29.40 is your entry. 29.80 is your upper bound to cover the high of the day, and you have a 40-cent stop. So that means your first R is down here at 29, and then 28.2 is your exit point. So go ahead and get your stop put in there at 28.2. So again, Lucid Motors, again on a short with the entry up at 29.4. Looks like the market's selling off a little bit, so that's going to be helpful. And we have our arrow drawn in there. So we'll come back and revisit that trade. All right, the last one we had to look at this morning was GME, again, to see what the Wall Street Bets crowd is doing this morning, giving me an error. So let's get that typed in correctly. GME. And it's bounced. So it was down pre-market down here at 196. Gosh, it's already up at 223. So again, if you're in the Wall Street Bets trying to game that system, good on you. I'm well clear of it. Okay, so here's your trade. If you're in it, again, entered at 29.4, stops at 29.8, as well as 28.2 is your exit point. All right, let's take a look about what's going on in long-term investing world. All right, CLXPF's up 3%. Credentials up 1%. Not too much is up here. So what's that? 15, 20 names. Real estate. If you're in, if you see another fund that's out there that is poised to do well in an interest rate rising environment, is the PPTY. That's a real estate, U.S. real estate, real property fund. So if you have that in your portfolio, likely it's not a lot of it. That's kind of a long-term hedge. It helps with inflation as well. Let's take a look at the downside. I bet there's a lot of names in the red. Okay, Icon down 6%. Luck and Coffee down 6% after their 50% move higher yesterday. No worries on that. Anytime you get a 50% move in a day, it generally does have a little bit of a sell-off. There's NIO. We talked about that for day trading at short this morning. Fubo, CRISPR, QClean, Twilio. These are a lot of your high flyers that have recovered during the NASDAQ's recovery over the past few days, but are now kind of resetting. There's profit taking basically in these names, if you will. You also see the ARK fund that's in there. Okay, so not much in the green. Things are trending down for the day. So it looks like probably setting up for a red day, which is no big deal because we've had so many green days that we've been hanging our hat on. Okay, so here's the trade you have set up in the middle in Lucid Motors short. Again, that's a SPAC. No real headline other than it's been on fire kind of lately. And you can see the SPY selling off down in 0.5% already. Let's check the Qs while we're at it and see what the NASDAQ's at. Q. Probably 1.5% down, if you will. Okay, 1.3. So everything's kind of selling off. You can expect that going into the Federal Reserve meeting, again, 2 o'clock Eastern. If we see a reversal at all, it's going to be around that time. Let's check out the VXX while we're here on the chart. You'd expect that to be popped higher. So again, 1337, not screaming higher by any means, but certainly higher. If the market continues to sell off and you wanted to day trade the VXX long, you can do that. Generally not my thing. I like to swing trade the VXX, but that is up to you. All right, last thing we'll cover is the, kind of already covered the bond ladder for our question of the day. So what is a bond ladder? It's a series of individual bond setups. Why would you do that? Well, it gives you more stability than simply putting it into a bond fund. If you buy into a bond fund, there's going to be a bond fund manager that is managing this huge ladder on his or her own, right? But the problem with that is they have to chase their numbers a little bit, and they're buying and selling within that instead of holding to maturity. If you get into like an FTLB, that is more stable because they are holding to maturity. So you really have to see what the prospectus says as far as the bond fund. Now, I saw a question pop up. I'll get to that here in a second. As far as if you have individual bonds, the only real thing you're really concerned about there is the health of the overall company. So if you buy a Ford bond, say you had Ford bonds going into a year ago, right? Yesterday, a year ago, we sold off 12% in the market. The world was ending. We're all dying. If you remember the negativity that's in the air, people were taking their money to the sidelines. And there was, that was the right move for some of your money, not all your money. And you saw the snapback that we had. As far as individual bonds during that time, the only criteria you had, say a bond that's normally worth 100 drops down to worth $80 or 80 cents on the dollar, if you will, because all of the bonds reduced in value. So for your bond investors, they were seeing this big move down in their portfolio, and they're like, Steve, you said this wouldn't happen. And I was like, well, like anything else, it won't happen, asterisk, unless it does, right? But unless we have a worldwide pandemic kind of out of the clear blue, then it will happen. But pretty much all of it healed. I did lose 2 bonds. CBL did not make it during that time, and Washington Prime, I sold out of those bonds before they went bankrupt. Things don't make it, but if you have individual bonds, then you can simply hold them. All right. So what are your options? From the chat, what are your options, if any, if your bond is called? Why wouldn't companies do that since rates are low? Okay, well, great question, Predator. Your option, well, first of all, if you buy a callable bond, so when I set you up in a bond ladder and I take the time to build it out with individual bonds, I like to buy callable bonds. Now, if you have the same bond with, say, Ford Motor Company, and it's at 5% and it's a callable bond, then they have to pay a higher interest rate because of that callable feature, meaning they can call it on a schedule. They can't just willy-nilly call it any time. There's windows they have to be able to exercise their right to call that bond. If they have the same bond and it's non-callable, then they're probably only giving you 4.5%. So you're making less over time. I don't mind bonds being called because that puts cash back into the portfolio and we can redeploy it where we need it. The problem is you don't continue to get the money. So as a bond investor, you are not happy when they call your bond, right? Because you bought it because you want the coupon payments and then you want your money back at the end. So you entered that contract and you're happy with it. So if you got a 5% bond, then yeah, you don't want your money back. You want the 5%, right? But companies, just like when you and I refinance our mortgages, companies are allowed to do that with their bonds. So you're right. Why wouldn't all companies do that? Well, if they don't issue callable bonds, then they can't, right? So if it's not callable, then they can't call it. They can't pay it off early. They're stuck to their payment schedule. But if it is callable, and that's why we've seen so much of this lately, is that companies are basically, getting a chunk of cash on their balance sheet. They're buying back their existing bonds and then reissuing lower bonds. If they can buy them back at 5% and reissue them at 4%, how often would you do that? All day, every day. That's interest rate arbitrage, right? So that is exactly what they're doing, and that's why you're seeing a lot of it. Now, some of them are just getting around to it now because they didn't have that big chunk of cash that it takes to do something like that. If you are getting offers, if you get the Schwab or TD Ameritrade, hey, we have a tender offer on our bonds. Well, if they're doing a tender offer, that means they've agreed, instead of buying the entire bond back, the $10 million worth, they're buying maybe $2 million, and it's a first come, first serve. And every single one of those to a T, I've said, don't do that, right? Because we want the bond, right? We want the coupon payments and then get our money back later. So good question there. Companies, if they can do it, they will. If they can't, they won't. Even Apple was restructuring their bonds. They pay nothing on their bonds because they're such a strong company. So they buy back their paying nothing bonds and issue out paying even nothinger. I know that's not a word, but it's fun. Paying even a nothinger bond, right? That's why we don't have AAA Apple bonds that pay, 0.6% or whatever it is that they pay. So good question there. All right, going to close out for today. Thanks so much for following along. If you're in this trade in Lucid Motors, I honestly, I'd say kill it. We're up in R, so whatever your risk unit is, you've doubled your money this morning. Let's kill it. Let's not hold out for the 3R like we normally do and go on about our day. Again, if you want to trade the VXX around the Fed meeting release, that would be 2 o'clock Eastern. So manage that on your own if that's something you're interested in. Otherwise, happy St. Patrick's Day, and we will see you guys back tomorrow. Bye.